On June 3, Alphabet's CEO Sundar Pichai announced that the company had just raised approximately $45 billion in an equity offering with an additional $40 billion to come, for a total of around $85 billion. The offering was described as well oversubscribed. Berkshire Hathaway, Warren Buffett's legendary value investment vehicle, put in $10 billion. The same day, the S&P 500 snapped a 9-day winning streak, Bitcoin crashed below $64,000, and over $1.12 billion in crypto positions were liquidated in 24 hours. Tonight we ask the question the market is asking: is this the moment when AI separates itself permanently from everything else, and what does the wreckage in crypto and equities tell us about where the smart money has decided to go? In the next 7 minutes we are going to break all of this down. We will cover the full Alphabet $85 billion raise, what Pichai said, why Berkshire invested, and what TechCrunch is calling a signal. We will look at why the S&P 500 snapped its 9-day streak on the same day. We will break down the crypto crash, Bitcoin below $64,000, over $1 billion in liquidations, and what Calshare prediction markets are saying about Bitcoin's year-end outlook. We will cover the Stripe, Visa, and MasterCard stablecoin scoop that could change everything. And we will look at Jensen Huang's Marvell call and what it tells us about the AI infrastructure build-out. Subscribe and let's get into it. The day begins at 12:31 p.m. with a major scoop from CoinDesk. Stripe, Visa, and MasterCard are reportedly close to launching a joint stablecoin platform, according to a report from journalist Ian Allison. If accurate, this represents the most significant institutional convergence around stablecoin infrastructure yet seen. Three of the most powerful payment networks in the world potentially building shared digital dollar rails. By early afternoon, the White House posted that May private sector job growth beat economists' expectations, framing a positive economic backdrop. But markets told a different story by mid-afternoon. According to posts from CoinDesk, at approximately 20:37, the Dow was down 620 points, the S&P 500 had snapped a 9-day winning streak, the Nasdaq dropped as tech wobbled, and oil hit its highest level in over a week. Bitcoin had already sunk below $65,000. Sundar Pichai had posted his Alphabet announcement at 16:04. Confirming the equity offering was well oversubscribed, approximately $45 billion raised with an additional $40 billion via an at-the-market program starting in Q3, for a total of approximately $85 billion, with Berkshire Hathaway investing $10 billion. TechCrunch called it a hell of a good signal. Yahoo Finance simultaneously covered Marvell Technology, noting the stock was up almost 238% year-to-date after NVIDIA CEO Jensen Huang called it the next trillion-dollar company, and separately reported that SpaceX was targeting a $1.75 trillion valuation at $135 per share ahead of its listing. Then, late that night, the crypto market deteriorated further. Cointelegraph reported Bitcoin falling below $64,000, followed shortly by confirmation that over $1.12 billion had been liquidated in the prior 24 hours, with longs taking the majority of the hit at $949 million. Calshare prediction market data from CoinDesk showed that fewer than 22% of users believed Bitcoin would break $99,999 by year-end. The first question many viewers are asking is, what does Alphabet raising $85 billion actually tell us about the state of AI investment? The short answer is that the signal is extraordinarily bullish on AI infrastructure, but the method of the raise is as important as the amount. Pichai described this as a multi-year investment strategy to meet the AI opportunity from enterprises and consumers. The at-the-market program structure, which allows Alphabet to sell shares continuously over time rather than in a single block, is a sophisticated approach that minimizes market impact while maximizing capital access. Berkshire Hathaway's $10 billion participation is the most symbolically powerful element. Buffett's firm has historically avoided technology companies it does not understand, and a $10 billion commitment to Alphabet's AI build-out suggests institutional confidence at the highest level of value investing pedigree. Cointelegraph's framing that Alphabet upsized the offering to $84.75 billion from an initial $80 billion target confirms that demand materially exceeded expectations. A second pressing question is, why did crypto crash on the same day that AI investment hit a record high? On that front, the correlation is not coincidental. The $1.12 billion in liquidations in Bitcoin's drop below $64,000 occurred on the same afternoon that traditional equity markets sold off broadly, Dow down 620, S&P snapping its 9-day streak. This suggests a risk-off rotation rather than a crypto-specific event. When institutional capital exits risk assets broadly, leveraged crypto positions are typically the first to be force liquidated. The timing of Alphabet's $85 billion raise, which channels capital explicitly into AI infrastructure rather than speculative digital assets, may itself represent a narrative shift. Institutional money is choosing AI equities over crypto as the preferred technology speculation vehicle. Some analysts believe the Stripe Visa MasterCard stablecoin scoop, if confirmed, could partially reverse this dynamic by giving crypto a legitimate institutional payments infrastructure backbone. What does Alphabet raising $85 billion actually signal about where AI investment is heading? The oversubscribed offering and Berkshire's participation suggest institutional capital has made a directional bet on AI infrastructure build-out as a multi-year investment theme. The at-the-market structure gives Alphabet continuous capital access, suggesting management expects AI compute demand to grow substantially and non-linearly. This may mark a shift from AI hype cycle to AI capital cycle, where the investment is in physical infrastructure rather than speculative models. Is Bitcoin's crash to $64,000 connected to Alphabet's $85 billion raise, or is this a coincidence? The simultaneous equity sell-off and crypto liquidation cascade suggests a broad risk-off rotation rather than crypto-specific news. Some analysts may argue that large institutional capital allocations toward AI equities like Alphabet are drawing investment away from speculative crypto positions, accelerating a narrative shift. However, the Stripe Visa MasterCard stablecoin report, if confirmed, could signal that institutional players are entering crypto infrastructure rather than abandoning the asset class entirely. In the United States, the Alphabet raise and the crypto crash are two chapters of the same story about where American capital is flowing in the AI era. The White House highlighted that May private sector job growth beat economists' expectations, suggesting the broader labor market remains resilient even as financial markets experienced volatility. Marvell Technology's 238% year-to-date stock gain, following Jensen Huang's public endorsement, illustrates how AI infrastructure supply chains are creating massive wealth for semiconductor companies that few retail investors were watching 6 months ago. SpaceX targeting a $1.75 trillion valuation simultaneously indicates that the AI-adjacent space economy is also attracting institutional attention at historic scale. For the global technology ecosystem, particularly developers, startups, and platforms building on AI infrastructure, Alphabet's $85 billion commitment signals a sustained compute availability trajectory that changes the economics of building AI-powered products. The at-the-market program extending into Q3 and beyond means Google Cloud capacity expansion is likely to accelerate substantially. For the cryptocurrency and DeFi sector, the same week that saw over $1 billion in liquidations also saw the Defend Developers PAC launch a political action committee targeting six figures across dozens of midterm races to back lawmakers who support legal protections for crypto and DeFi builders. This signals that the crypto industry is not retreating from its political strategy even as prices fall. For Asian technology and emerging markets, the combination of a record US AI capital raise, a dollar strengthening against currencies like the Indonesian rupiah, and Bitcoin weakness creates a complex environment where technology investment confidence and macroeconomic stress are running simultaneously in opposite directions. To be fair to the skeptics, the strongest version of the cautious argument on Alphabet's $85 billion raise goes like this: massive capital raises are not the same as returns. The history of technology infrastructure buildouts is littered with examples of companies that raised enormous sums and built genuinely transformative infrastructure only to see that infrastructure commoditized and their returns compressed over time. The fact that the offering was oversubscribed tells us about investor sentiment, not about whether the underlying AI revenue opportunity will justify the capital expenditure. On the crypto side, some analysts within the crypto community would argue that the current price weakness is not a structural defeat but a consolidation, a period in which over-leveraged speculative positions are flushed out before a new cycle. CoinDesk's own newsletter coverage noted that crypto will grow by upgrading Wall Street's trusted products rather than replacing them, a thesis that the Stripe Visa MasterCard stablecoin scoop directly supports. Arthur Hayes, cited by Cointelegraph, called one token a shitcoin destined to moon, illustrating that not everyone in the space is despondent, and that contrarian positioning in crypto during downturns has historically been rewarding. Here is the kicker: a 12-year-old Bitcoin coin worth nothing to the financial system finally got peeled open this week, moving $1.78 million on-chain for the first time since 2013. The original believers are cashing out. The institutions are building the rails. And Alphabet just raised more money for AI than most countries' annual GDP. The money has decided where it's going. The only question is whether you're in the right asset class. Drop your take in the comments. Is Alphabet's $85 billion raise the signal you needed to go heavier on AI stocks, or do you think this is a classic bubble top? And are you buying or selling Bitcoin below $64,000? We read everything.